What's up, everybody? Welcome back to another live webinar over here at High Performance Trader. Today, we're going to be breaking down week ending in 2/2/2024, right? First month finished. First month of 2024 is down. Super happy, super blessed, super grateful to be here today and just really break down the week that we had. It was a phenomenal week. It was one of my best weeks in a pretty long time. And I want to talk about today some of the things, right, that, obviously we're going to break down the week, but one thing I really want to talk about here with Darren is the power of risk, reward, and money management, bro. Dude, that just trading, right? Like, trading this new instrument, SPX, how beneficial it's been for me, capping risk at $150 a contract, and just how that reward has been so much bigger and the difference it's done in my profits and my consistency. It's crazy, bro. I'm just super pumped. We've had a very good week, dude. It's crazy, dude. I took 9 trades this week. That's it. 9 trades, bro. I've literally cut my trades in half, and I'm making way more money than I have. And I really want to talk about why. And, we were just talking about before this started, in personal development space, you need to build a standard for yourself every single day that you adhere to in the market, outside of the market, anything you're doing in life. You must have a standard, and it will reflect in your P&L and in your performance. Because if you increase your standard, and I'm not talking about getting super analytical on your trades, I'm talking about just increasing that patience, bro, increasing those standards. I mean, Friday was a perfect example. Me and Darren, we were live. We were super patient. Did we miss some setups? Yeah, of course. Did we care one bit when we cleared 78% on this trade? Absolutely not. It doesn't matter. What matters is you have a standard that you adhere to. And what that does is really just open up just doors, bro. It's crazy. But welcome, Debo. How you feeling?
I'm feeling great. Everything you said, I got tons of thoughts on.
Yeah.
This last since the last webinar, we got a new month, and a new chance to look at all of our data.
Yeah.
But we'll get into it. But just about that, about the patience on Friday,
it's crazy.
It makes total sense that you have this feeling like you're missing out, and if you can hold through that, and still keep your mind, that's what's going to give you the best trades.
Yes.
And I don't know. I just used to. When I felt that feeling of missing out, it used to cause me to do irrational behavior.
I was just about to say that.
Now it almost confirms that I'm doing the right thing because I'm able to hold through that feeling.
Exactly.
And it's crazy. It's really,
Bro,
really empowering to feel that way and to still execute on your process after feeling that. Like, regardless of how you feel, or how much the market has moved already in your direction.
Exactly.
To still execute on your plan, it just really
feels amazing. It's galvanizing, bro, because it's you fleshed it out perfect there. Like trading live is new to us, right? This is our 4th time doing it. And one thing about trading live is it introduces an attached outcome, meaning I want to put on a winning trade for my team, for everybody. And it kind of introduces the mental game again, right? Because as traders, we go through this mental game of, I'm not going to act on my emotions, check, and we do it by ourselves. Once you introduce trading live and you have people on there, now that same feeling comes back of, ooh, I need this. I missed a trade. That FOMO comes in, that irrationalness comes in, right? And it's like, even though that's present, we don't break character. And it's a perfect testimony of exactly how you're supposed to trade. You're going to miss setups. Dude, I don't care. Every time I miss a setup, and we even said this in the live, it leads to a better scenario. You know what I'm saying?
Yeah.
And we weren't over analytical, right? We weren't like, oh, I can't, take this because X, Y, Z. We weren't finding reasons not to trade. We just didn't feel comfortable taking a trade until our criteria presented itself. So I was really proud of that. We're going to save that one for the last. We'll do that one last. but I was very proud of it.
I also had 9 trades this week, by the way.
It's crazy. No way, bro. That's
it looked like our hit rate.
Yeah.
Our hit rate for January was 1 trade off.
Yeah. Yep.
And so our trading styles are very, very similar. And it's not a surprise, but yeah.
It's yeah, no, bro. That's insane. And it's crazy though, because it just highlights the risk reward like crazy. Like, we talk to traders constantly, and everybody thinks it's an analysis game. Everyone thinks I need to learn the new edge under the sun. And yes, identifying the market conditions is paramount to reaching a consistent profitability standpoint. But it comes to a point where, we build this relationship with the market, and it can't be based on analysis. It has to be based on execution and that self-control, right? And I really want to break that down. I mean, 9 trades. I've cut my trades in half. I used to take 3 trades a day. I've literally cut them in half. You guys are going to see it. And,
Josh, make sure you share your screen, by the way.
Oh, yeah. Thank you for reminding me. It's something I just always forget. I get super super excited. All right, here we go. I'm going to turn her on right here.
Sweet. Yeah, there's a whole bunch of factors that you can control in your trading. So you have your win rate, your hit rate, you have the amount that you risk on every trade, and then the amount that you let your profits run.
Yeah.
And even if your hit rate is low, like mine, fluctuates around 35 to 45%. So it's easily below 50%. But there's other things that I can control. I can control how quickly I stop out. I can control how far I let my runners run.
Yeah.
And those things will make me more profitable, but still have the same hit rate.
Yeah.
So I don't even need to worry about being more right.
No.
I just need to manage my trade better.
Yeah.
The ones that I actually get in and they move in my direction. I have to manage them better. And by doing that, I can increase my profitability.
Like no other. No other.
Keep the hit rate exactly the same.
Exactly. The hit rate is really meaningless, right? Like, don't get me wrong. Having
it's important to know, but there's other factors that you can control.
Exactly. And you got to ask yourself, are you utilizing those factors? So
exactly. Yeah.
And that's probably, and if you are, seeing inconsistent results, it's probably because you're not, because that's what I did for super long. So, this trade over here, I marked them all on SPY. SPX did look a bit different on this trade, but I'm just going to pull it up so you guys can see exactly what I was doing. Where's Monday the 29th was right here. So as you can see over here on SPX, SPY, the open print is much different. And this is one thing I actually want to talk about, because once again, we cannot get too analytical. Yes, open print is different. But if you're viewing price action in a state where it's a story, it's an area. I'm only looking for battles to be lost or won, right? And this may be an area, it may be a zone, it may be a level. So going into this day, right, you can see open prints established at 48462. Buyers rip up. We come down, get a beautiful liquidity grab that my buddy Joe grabbed this trade, dude. It was, and I love it, because to grab this trade, you have to have tons of conviction, right? Because at one point, this candle's completely red. And even though it's red, he's going, listen, I'm taking this long because conditions are bullish, right? Not because he thinks this or that or the third. He's going, I'm taking this long because in a bullish scenario, buyers are going to defend this, right? I'm not sure exactly where he got in it, but I love seeing him trade the conditions of the market. Now, this trade was really cool because we came down below open print for a retest. Now, this used to be, or this would have been a prime short entry for me, but it happened very fast. And this is a testimony to not chasing, right? Whether or not, say an opportunity is presented itself and you miss it. Once again, it's going to happen. There's 2 things you could do. You could chase it, right? So trading SPX, if I chase this, so I done the math, Darren. My stop loss is equivalent to 40 cents on SPY. So if I...
Oh, okay. That's actually very, very good to know.
Yeah. So now that's why I didn't take this trade as well, because 40 cents on SPY is going to cost me around 22% on SPX, which comes out to that 100.
Dude, that could have saved me right there.
Yeah.
That could have saved me if I knew the cent conversion.
Yeah. So, and
I took that short, and I knew it was a lot of risk, and I got stopped out. But I see what you're saying about how that's very avoidable.
Well, so mind you, we have no idea what's going to happen here. I wanted to take this. I couldn't get in. Notice, we're not going, oh, but there was demand down here. No, listen, this is a beautiful short play. This is a break, retest off OP, fire trade. I couldn't get it because my risk was too large. And that right there, literally, that decision not only kept me from taking the short, but helped me remain objective to what a long would look like. And over here on SPX, it painted a little different. But I want to show you guys, because going back to that stop out, I entered this trade on this candle, right? So my stop, and we did this Friday as well, was the top of this candle. So it was a little below it. But this right here, you have to ask yourself, this is bearish structure. This is a break. This is a retest off open print. This looks very bearish. At what point does it become bullish? Or what point do conditions change? Right? And then once we couldn't make the lower low, right? That was paramount for me. And not only that, this little level, which was, I guess established in pre-market, you could say. But I like to keep it it was right here. It was the previous low. So anytime I'm determining an entry, a setup, I must determine the conditions of the market. So for me to determine the conditions of the market, I need to see it break. I need to see a retest. At this point, I need to see a lower low to confirm that conditions are still bearish. Once we break above this 48427 into OP, right? That's kind of an idea. That's kind of telling me that the previous low couldn't hold. That's not a game changer for me, but I just didn't want to enter the trade. And then you can see price comes down, buyers defend it. At this point, we cannot make the lower low. We close above the 9 on this candle. And instead of chasing, I knew we were coming right into open print. I wanted to see the battle get lost. And this is why I videotape every trade too, Darren, because we could sit here and talk about this, but when you watch this live on playback, the last minute of this candle, bro, literally like the last 30 seconds, this candle was completely red. And when it was red, it still looked like a beautiful short play. Like this was completely red. But having my eye on this little structure point from that candle, I was willing to put on the risk and target the highs. So, I lost it. That was one of those trades right there where you have to you run through and go, at what point do the conditions of the market change, right? And this was a beautiful example of it. And then once we ripped into open print, it ended up soaring, right? So it was, this little move right here is all I captured, right? And it was a phenomenal trade, right? Because, once again, when you change which instrument you're trading, right? SPX has very costly pullbacks. Anytime I'm extended from that 9, which in this case I'm about, 24 to 30 cents away from it, right? That's a trim for me. If I've hit my risk reward ratio, right, which on each contract I'm looking to make $450, that's a win for me, right? And that's like what I really want to hammer in this webinar is like, it's not about being right. It's not about capturing the biggest move every day. Every day, your goal is to perform a process and a system that highlights your risk reward equation. So, that was my trade into open print. And then we ended up getting a fire trade right here as well, what I want to talk about. But before I move on, Darren, is there anything else you want to highlight on this trade?
No, I'm just really glad you brought that up because oh wait, I don't think that's it right there.
No, it's not. No.
Okay, anyway.
129.
But really, really important that you have to have criteria on your risk, on how much you're willing to risk. And if it's too much, then you will not take the trade because that more setups will show up in the market. It's like if you're operating from a scarcity mindset right here, you're thinking, oh, I might not get another setup today. I might not get a setup, so I have to bend my rules so I can put on a trade today.
Exactly.
And I mean, once you get into this process, it makes total sense why you're going to get smoked on a trade like that, because it causes you to bend your rules.
Yeah.
And I mean, that's really crucial. I took that short play.
Yeah.
And hearing you say that and knowing how much, I remember as price was going up, in my head I was thinking I should be able to avoid that, but I didn't know how much risk that move would equate to.
Yeah.
And I remember thinking in the back of my mind, like, I have to study that, but I've not really encountered that specific problem.
Yeah.
But I was like, all right, I'm moving on. I have to erase that from my brain. I can't let that affect me for the rest of the day.
Right.
And you know, and I moved on later.
Yeah.
So,
and that's why, Darren, you're gonna see a lot of my trades they're kind of different now. Like, I'm taking a lot of breakup structure trades, and the reason this is because they provide amazing stop losses, and you're usually capitalizing on other people's stops. Like this next trade right here. This trade, I went long right here. Oh, I want to show you guys why. So I captured this move, right? And this was a really this move was very, very well played. I want to show you guys why. So open print was defended very well, right? And now in my mind, I'm going, wait, that wasn't end of day. Hold on. Was that end of day?
This is Monday you're talking about.
Yeah, 129.
Yep. Yes.
Okay, so once again, I take this little trade and I make my little risk reward. Okay. Now I couldn't really find anything else I wanted. Right? Price is rallying. Am I just getting back in? No, I didn't like it. I didn't want it. I didn't need it. And then price starts to mess around up here. Now, I end up going long right here, and I want to show you guys why. And it's all based on structure and when structure breaks. So if you take the highs from the previous, right, it becomes a battle between buyers and sellers. We break above it, buyers are in control. We break below it, sellers are in control. So right here at 48825, right, sellers are kind of in control of the market. Now, hold on. When I'm just watching price, all I'm doing is drawing structure off the lows. So at this point, I'm open to a short play. We've broken below, and I'm not like ready to take it. I'm just playing price in my mind. I'm playing the story in my mind, and I'm going, okay, bearish structure starting to form right here off 48834. Now, there's two things that can happen. Sellers can take advantage of the retest, right, which is right here. And price can go back down to open print or maybe even end of day. I'm trying to get it right here. Okay. Or buyers invalidate this scenario, right? Because we are in bullish conditions. And that provides a perfect reason to take the market long when all those sellers are stomping out, right? So just always being in that present moment, watching structure, and then making money off it when it breaks, it's just a phenomenal way to trade, right? And because it keeps you in the present. And that's why I love this so much, Debo, is because right here we have bearish structure forming in this little area, right? Now, I'm bullish. End of day's been defended. Open print's been defended. We're in an uptrend. I'm bullish. Here's a bearish scenario. This is a perfect place for me to identify sellers losing. Right? And when we see someone lose, it provides a great opportunity to capitalize on them stomping out. So,
yep.
That's just,
the other thing I like about that is it gives another reason to not care if you miss something. Because
exactly.
If you miss something, then now you're not in the trade.
Exactly.
You're not hurt if it moves against you. And now you're remaining completely objective. Because if you had to stop out, you're going to spend the next minute thinking, fuck, I stopped out.
Just
what
lost.
did I do wrong?
Yeah.
And you would miss the perception of the next trade.
Exactly.
So this is even more reason to not take setups, because if it does move around, and you can see, you know, that was a perfect, the example we did before, that was a perfect break and retest to the downside. It's actually a high quality setup. Like over 50% of the time. But if you miss it, no doubt, because there's 40% of the time that it doesn't work.
Exactly.
And then
exactly.
You can capitalize in the other direction.
Exactly. Yeah. And it's crazy because I used to always, one of my main issues, right, back in the day is I would blow through all my buying power by 11 o'clock on shitty setups. Now think about it. If that's something I'm doing, it's probably something every other retail trader is doing. Now think about it in an auction large money aspect. They need liquidity. So they're going to do the opposite of what retail does, right? They're going to smoke retail all day. That's how they make their money. So you not caring about those setups in the beginning of the day, and I'm not saying don't take the beginning of the day setups. I'm just saying I make so much more money off these later in the day ones. It's caused me to start trading those more. And because of that, I'm usually sitting on my hands until I see somebody lose a battle. Once someone loses a battle, like right here, right? That's when I like to put on my trades. And it's, you know, it just keeps you completely in that present moment. And you're going to see this week, that was pretty much how I traded the whole week. I mean, the next day, took this trade here. Once again, look at, dude, I didn't trade until, what is this? 1:15. You know what I'm saying? Like, dude, patience. Sat, watched, got tons of shit done. Watching price, like this whole, I need to be at my computer staring all day. I'm just saying, like, you don't need to be in that state. You can be in a like flow state where you're watching price action, and then when the market gives you a great opportunity, like right here, you capture a beautiful move to the upside. You know what I mean? Like every client of mine I have, I always am recommending like one trade, like paper trading, because paper trading makes you not care. I'm always recommending lowering how many trades you're taking, right? Because what that does is get you in that mind frame of not caring. I don't need to put on a trade today. I don't need to be right today, right? We constantly are associating a green day with being right, with feeling good. Now, our decisions and our decision-making process is based off emotion. And as long as it's based off emotion, we're going to get inconsistent, shitty results. Hands down. So,
yeah, I remember there was a point in the past when I did research on when my high quality setups were.
Yeah,
this was sometime back last year. And I saw that they were all around like 10 to 11. And so I was like, okay, this is when I'm going to put my setups. But you have to realize that there's market cycles, and something that worked last month does not have to work this month.
Exactly.
And I've seen recently that the times of these high quality setups, you know, for the last 2 months, they've been later than 10 to 11. You know, I did a study back then, but if I did it now, I think it would change. And I've just seen, you know, through price action that it's moved later in the day.
Yeah.
And it makes a lot of sense to me, actually, when I think about it. Like, there's more and more people that are just thinking that these high quality setups have to happen early in the day. We all know about the morning session,
right?
You know, and in the past, I know it's worked. I know it's worked well and with high probability.
Yeah.
But you have to ask yourself, when, like, have things changed? You have to be willing to accept that things have changed and now adapt and, you know, adapt to new market conditions, new market cycles.
Yeah, exactly. So, actually, bro, I actually took 3 trades this day. I was full of shit. This was this day. Look at this.
That's crazy, because this day this made a lot of sense to me.
Yeah, look, here's the journal.
Tuesday.
Yeah, this day was all over the place. And this day, break of structure, once again, was paramount. It was critical. There was constant. Now, this is where that patience that we were just talking about is going to play such a vital role. So open print, we rip in the morning, right? Once again, we're not chasing the first trade. Oh, we're getting a break and retest off this. I need to go long. No, you don't. You need to sit on your hands. Let this play out, dude. Like and a reason why I stress this so hard, dude, is because I spent, I think it was like 3 years in that tunnel vision heavy, bro. I'm talking like 3 years of FOMO, rush, take this trade, take that. Like, and the thing is I journaled them all. And I would just constantly, anytime I got that FOMO, because what happens, Mark Douglas breaks this down perfect, bro. What happens is you learn an edge and you think that edge is going to make you tons of money. And then you start making decisions based on emotion, which screws up your results. And now you stop trusting your edge, even though you were never performing properly, right? Because for your edge to work, you must stop out when you're supposed to, and you must let your winners run. So, not to get too off track, but all I'm saying is just sit on your hands, and see how it plays out. I mean, price ripped down into open print. For me to talk about this day properly, I got to whip out the 1 hour because it really highlights what was going on. So this was 1:30. Okay, right here. So we had that all-time high that was established the day before, right, at 49121. So price ripped off pre-market right up into that level, and we got that heavy seller. Okay, so now price comes down into open print. Now this is where the battle begins. Now, like I said before, I need to see somebody lose. When someone's losing, that's going to provide stop outs. When those stop outs are provided, I can capture the move in the other direction, right? So you're going to see here. In my mind, I'm going, okay, we just ripped off all-time high, structures created. So I take the low of that candle and now watch the 9 in structure. And then I watch to see how price is reacting at open print. Because once again, I'm extremely bullish on the day because look at it. This is what the day, the 1 hour looked like. We're holding above structure. I do have, like in my mind, I'm going, okay, we could see a nice move back down to 48909. Retest this bullish structure down here. But once again, all I'm thinking in my mind is what's in front of me, right? So for me to go short, I want to see that healthy break and retest off open print. We couldn't get it. We were playing with the 9, playing with the 9, or playing with open print, playing with open print. This is not bearish. And then, bam, we close above the 9. At this point, I'm like, okay. And this is where that 9, Darren, does so much for me. I think yesterday you asked, you're like, do you take trades if it's below, above? In reality, all what I'm looking for, I mean, look, we literally could not close above it once. And then, bam, closed above it. But not only are we closing above the 9, we're closing above open print after closing below it. See, this highlights the story. Right here, we closed below open print. I thought this was going to create bearish structure. Or maybe it was a possibility. And then, bam, buyers soak that up immediately. We're closing above the 9. So now I need to find an entry. And now what I do, and now, once again, when I say need to find an entry, what I really mean is I need to see sellers lose. So if you take these lows over here, I need to see a lower low. I need to see some sort of structure. And buyers just came into it. We kept holding the 9. I went long over here at 1111, right? 1105, 1111 candle right here. Boom. Targeting that high of day. And literally this thing ripped all the way into the highs. This was a beautiful trade. I took profits right here. Not mad about it whatsoever. This was a banging trade. But this was that day, Darren, when contracts just didn't pay.
Dude, I know. I was really annoyed, and I don't know why. I was confused, honestly. Because I have bracket orders on Active Trader.
Yeah.
And I have it set at my 1 to 3 and 1 to 4 or whatever. And
this shit's far away.
And I remember I got into the order and all of my orders were like way high. And I was like, whoa, that doesn't make sense that we have to move that far to fill my 1 to 3.
Yeah.
And that's when I realized, like, however, the exchanges are pricing these options, like, they just were not moving today for whatever reason.
Even on SPX, I think it was 58% I made on this trade. And usually I make that on like 60, 70 cent moves, even less. So, I mean, it's all volume. It's, there's a bunch of factors. So
yeah, but that day, one more thing about that trade, where you have that arrow right there, or maybe just below it, that's where I scaled out of three of my contracts, and took my initial profit. I think my position was at 30% there.
Yeah.
And then I moved my stop up to break even. So if it traded against me, the rest of the contracts would be free. And I ended up, obviously ending up green on this trade. But that candle right there, that first large red one, after we rejected all-time high.
This one.
This one. Keep going.
This one.
Right there, that one right there is what stopped me out of my full position.
Yeah. That's well played, though. It's well played. I mean, I would have.
I would do it the same again.
Yeah. I mean, you played structure perfect. It's difficult. I mean, it's like, and this is one thing that's helped me trading SPX. I've had to change my profit-taking approach because, if I'm playing structure, and maybe this will change in the future as I become a better trader. I'm not sure. I'm not saying it's right. It's just one thing I'm noticing in my journal is when I reach a level, right? And, depending how far away we are from the 9D EMA, I guess you could say I look at it in a probabilistic fashion because the probability of a retest of the 9 is extremely high, which means a pullback. Now, I have to ask myself, when I hit a target or I'm close to a target, is the 30-cent move over here into the pullback worth it, right? And sometimes it is, sometimes it isn't. It really depends on the conditions of the market. See, if we're ripping into all-time highs, I'm going to book it because I always can re-enter, right? And not only that, like we were talking about in the beginning, hitting your equation is the goal. Not being right, you know what I'm saying? It's having a systematic process that yields results, right? So to get results, we got to take profits. We got, sometimes it's gonna sacrifice us being right. Now, if I took profits down here, just because I was up $400, that's a problem. See, that's something I dealt with for a while as well. See, and that's a whole nother topic we'll get into another time. But like, having that systematic approach, right, and structure, that was beautifully done, bro. That's exactly how you want to do that.
Yeah, I mean, if you have a specific risk to reward that brings you to profitability, and you hit that and you take it, nobody's gonna fault you.
Yes.
You almost doubled your money. You hit your risk to reward that brings you to profitability. It doesn't really matter if the market keeps on ripping. You can always find a new opportunity. But this is what we talked about in a couple recaps back. But rewarding yourself when you see your edge, you take your edge, you hit your risk to reward, and you take your profit. It's like you have to reward yourself for seeing that, and pay yourself as the market makes money available.
Exactly, because there's nothing worse, Debo, than hitting your risk reward ratio, your profit ratio, and giving it back. There's nothing worse than that.
Yeah, there's no need.
There's no need for that. I love how you said that. There's no need. Now, the next trade. Here's another beautiful break and retest off open print that I didn't take, and I want to show you guys why. So we fall below open print, check. And look how bearish it looks, dude. Like, I'm like, in my mind, all I could think about is capturing this move down to 489, right? This looks beautiful. Beautiful. But once again, for me to do that, I need to see a healthy downtrend, which means off the previous low, right? So once again, playing the conditions in front of you, right? I wanted this short play down to 489 so bad, right? I wanted it so bad. It looked so good. But in my mind, until we could get this break and retest off previous low, I'm not willing to take it. We got pre-market low right here. Once again, I just didn't like it, so I didn't take it. Price comes up. Notice here too, Darren, perfect entry for a short play. And then the candle after it literally pretty much invalidates it. So it literally just, it speaks to me like so many people went short right here. And it shows on the stop outs. It's crazy. But
and I would argue that's not even a perfect break and retest to the downside. Like if you do a study on how the break and retests that do work, the majority of the time that they work, it would have done a break and retest in this case off of 490, 35, right there.
Yes.
And you just have to think in your mind, like, is that a valid break and retest?
Yeah.
And I think some trade later in the week, off pre-market high, I remember I saw it and I was like, you know what? It doesn't look like a proper pre-market high rejection. It's imperfect.
Yes.
I need more confirmation.
Yes.
And I immediately raised my criteria. I have to see something else here that's telling me condition. And that same strategy would have prevented you from this.
Yeah, exactly. And not only that, bro, you said it perfect. I need to see something else validating market conditions, bro. That's the most important. Like the main purpose of the break and retest for me is to understand who's in control of the market. That's it. If I understand who's in control, I can trade with them. You're going to see SPX looked a little different. And I want to show you. So here's open print on SPX. Or a little right there. Boom. So this is what it looked like over here. And it just didn't, like you said, I need to see it off the lows. This was a critical level from the day before, which buyers defended pretty well earlier in the day. So I'm going, okay, at what point do sellers lose? Right? At what point would I, A, stop out of the short, and B, take a long play? So I take the previous low, draw a little line. We break below it. Bam. I'm not going to lie. I literally entered this long play as we were crossing over this. And the reason why I did that is because it gave me a much better stop out. And I was just playing with the conditions of the market. Right? So, it's, once again, waiting for retest, not waiting for retest. You guys know I'm always going to be an advocate for the retest. But at the same time, if you're willing to put on risk based on your understanding of the market, there's nothing wrong with doing that. You know what I mean? I'm not telling you to just, take things long without a retest. It's just at this time, that fake out made a lot of sense to me. And I was like, if this isn't going down, then it's definitely going to go revisit open print, right? So that was my next trade. And then look at the 9. Super extended, sold. I literally sold at like almost the perfect spot here. And I literally just using that 9. If I'm super extended from the 9, right, and I haven't hit my target yet, but I've hit my 1 to 3, I'm taking it. And then that same exact mentality here with structure, check this out. So then we get a break, and now we're retesting structure. There's 2 things that can happen here. Sellers control it, and we take price down to 4918, or buyers invalidate it. Bam. Retest. I'm long again, targeting high of day. Boom. It's one of the best days I've had in a long time. It's really good. And that's why I love these little breakup structures, Darren, because it just keeps me in that present moment. Like, nothing.
That's fantastic.
Yeah, like nothing's going to speak to you more than running a bullish scenario and bearish scenario in your head. I mean, and just look at how price was defending the structure here. I mean, dude, it was perfect. Boom. It was nuts. And I can't help but think, bro, like this week, like I said, is really, really good week. And I have to ask myself why. Like, why was this week good? Like, that good. And dude, it was just patient in present moment in risk reward ratio. It was like literally, I texted that to you the other day. It was like, dude, patience, risk reward ratio, and discipline is critical in this game. But if you could get those under your belt, and it's like, there's this new motto I got. It's, I'll know it when I see it. You know what I mean? Like, we have no idea what's going to happen today. But when we see it, we're going to know it. So,
yep.
Yeah, it was a really good day right there. All right. On to the next.
Where are we at? Thursday?
31. Yeah. It's going to be Wednesday. Wednesday.
Oh, what was this? Some kind of news this day, huh?
Yes, it was. Oh yeah, this was dude. Yeah, this was
interest rate.
FOMC.
Interest rate day.
FOMC. Yes. So just
money
like
printer,
go Burr. Dude, look at this trade I took. So I only took one trade this day. That right there.
That's great.
That was it, dude. But I still want to run through the the structure here. And once again, I can't help but, if it's not present, don't take it. And that's not saying that there weren't setups here today. There was. I missed this in the morning. Notice structure here that we just had mapped out. Let me whip out the 1 hour. Bam. So just like the day before, I was like, okay, I'm bullish. This is bullish structure on the 1 hour time frame. Notice how me and Darren are constantly using larger time frames structure to understand the context of the market. See, if you can look at the 1 hour like you're looking at the 5 minute in a structural basis, meaning break, retest, bullish conditions, bearish conditions, it's gonna help you set your mind for who's in control. So when price rips down to this 489 level in post market from the day before, we're not really getting any strength, right? Like, and then we open below it and rip right into it and get selling. That right there paints massive bearish conditions for me. Like I said, I really couldn't. I mean, I missed this open print. I guess there's a really quick break below it. I couldn't get in it. I took a trade on Qs in the morning. That's actually right. This. I sold it really quick though. Let me see.
Yeah, I took a short on Qs, but
this guy
it's very unconventional for me.
Well,
yeah.
What's crazy?
Yes, that one right there. Yeah.
What's crazy about this, dude? I actually just went over this trade. Look at this, Darren. 420.51, which is this low. We got a double bottom here and the 1 hour time frame. We break below it. And then if you go over to the 5 minute, look at, bro, that was our entry short. Right off that was my entry short. 420.51. I'm not sure where you got in. I got in right on that candle right there and caught this little move. Isn't that crazy?
Yeah, so this was one of the very, very few times where I will enter short while the candle is still red. Most of the time, I wait for that break, and then I wait till it comes up for a retest.
Yeah.
For whatever reason, I had marked the level exactly at 420, and this was on, 420. So 420, we had one candle hit 420,
yeah.
Second one, and then a third one all above, and they were inside candles.
Right.
And for some reason, I don't often look at inside candles like this.
Yeah.
But I said if we can break that, if we can break that 420 level, I'm in. And as soon as I saw us push all the way down to that 420 level and just snap it, that's when I got in, and I actually got a really good fill. surprisingly, because normally when you get huge volume like that and a big candle, you don't get filled well. But I got a great fill, and it placed my stop right at the top of that red candle, and I was happy holding it all the way down. So
nice. Well, no, it's crazy.
And actually, that first candle hit my scale out of 40%. It scaled me out at 40% at my 1 to 3 R multiple. So you know.
And think about it, bro. You got like this literally looks so small. This candle's range, I'll tell you right now, is $1.12. $1.12. Bro, QQQ moves, bro. And this is why I took this short right here. Ready? So, open prints at 420.83. We break below it. Come up for a retest. Happens so damn fast, right? I'm like, oh, wow. Literally, we're 30 cents away from OP at this point, and I'm not in the trade, and I want to be, right? But I want a good spot for my stop out. So, next candle. Nothing happens. Next candle. Buyers couldn't break that 420.51 level. And it's kind of weird, but I'm sure everyone will understand what I'm saying. When you're watching live price action, candles react to levels differently at different times. So when this ripped into open print, we got immediate selling. Bam. And then right here, there was like no movement. Right? So what that kind of told me, and I don't know if it's good or bad, but sometimes I tend to do this, is when we rip into a critical level and we get like, movement, that's telling me something. When we're getting like stagnant, not that much movement, that's telling you something. And I just felt very comfortable taking this short on this candle. And it was crazy because like I wasn't even really commenting in QQQ alerts. And out of nowhere, I'm like, hopping in shorts and Qs, stop above 420.51. And and then it sunk. And then it was a massive move. I booked profits at the end of that candle. Looking back, structure, and I literally wrote this right after. I'm like, learn to take profits based on structure instead of emotion. But I think my SPX trading's kind of starting to throw me off. I got to reevaluate my profit taking. So, but then after that, I didn't make any move until the news, which the news, once again, was all break of structure. You guys are going to love this example. If I can, it's this day. Okay, so I had this daily level at 486.40, right? And I'm going to show you guys why that level stuck out to me. So if you go to the daily time frame, we're talking about this day right here, this big red candle. So before this candle was big and red, it was, above this yellow line. So in my mind, I'm going, okay, the low of this candle is critical because if broken, I want to go down to the weekly time frame 48276 level, which is exactly what it went down to, which is insane to me. But yeah, it makes so much sense. And then that was my bearish scenario, right? So if we broke 486.40, a sell-off down to 48276. But if buyers could defend it, I was then open to a 490.20 target, right? Or maybe the tops of these candles. So that was my analysis, right? That was my one level that we talk about all the time that really make or breaks the decision-making process for us, right? The canvas, right? That's the block of marble, and we're Leonardo da Vinci. You see what I mean? Or, that's the marble we need to see carved by large money for us to make a decision. So that's like, you know what I mean? That was my idea going into this. So
crazy, dude, that you mentioned that, because I literally like half a year ago, I wrote like I don't know what you want to call it, a dissertation about like my trading style, and I basically likened it to, at the beginning, just a huge block of marble, And then every new strategy that I learn or every new like hardship that I go to, it's just like chipping a block off that until I'm like creating this like masterful sculpture.
Yeah.
It was just like an analogy that really spoke to me.
Well, bro, it's
weird.
Yeah, it's and in reality, bro, like it's our job to understand what large money's doing. So these levels, these zones are our block. They're more large money's block of marble, and we just see what they make. Right? Like that's how I like to see it. But so we broke below it. The 5-minute time frame has changed my life, by the way. Because you can see right here, like on the 2-minute, you were probably getting some great break and retests, bunch of fake outs. But on the 5-minute, all I see is indecision. All I see is, I mean, yeah, we're below the 9. We are getting some selling volume. But I know a hell of a lot better than to take my first break and retest on FOMC. Right? Like I've made that mistake plenty of times. So we break below it and we come up for the retest. We're closing above the 9, right? So that's my first signal of like, I'm not going to go short. But now I need to see sellers lose, just like we were talking about earlier. And when I see the sellers lose, that's going to provide a phenomenal entry for me to target high of day. And that's exactly what happened. We rip up. I take this long. No lie. Once this candle closed, this went red right into this level right here. And once it started to suck up, I took this long and it was just explosion above it. It was like, poof. It was insane. This trade I'm really proud of because it's not only, this is where I used to lose money, right? I used to always lose money on these. It was a break, retest, go short, get smoked. And this which really highlights trading the story, right? Because you don't need to take your first setup. Take the story. Whatever the story is telling you, that's what you need to be taking. And it provided a great stop loss. I almost got stopped out on this candle, Darren. Look at that, dude. I was literally, I think, $5 away from being stopped out, which I would have been sick. Now, let me ask you this though. Oh, bro, you know how sick I would have been? That would have cost a lot. Like that would have, but that's the game.
Yeah. Especially because on news days, it has to move so little to stop you out.
Yeah, exactly. And it's like, okay, why does that happen? Every time you get stopped out, somebody's making money, right? That's the truth. Every time you win, someone's losing money. Every time you lose, someone's making money. So when you got to think, when your price stomps you out and then in your direction, you're just another victim of large money. It is what it is. It's okay. It's the game, right? Just be aware of why that happens, right? Just having that understanding is going to help you anticipate why you're in drawdown or so to say. Ripped way above the 9, big gap, took profit, and then literally this thing sunk. Even all of this was a liquidity grab. This is a classic large money screw you day. Look at this. And it always is on news days. Break below, grabbed a bunch of short sellers. Break above, grabbed a bunch of longs. Then broke below, sunk. But look at...
Yeah, this is why on news days, I really feel like the worst thing you can do is watch fundamentals. Because if you looked at the interest rate decision, you would have been like, oh, they didn't change anything. Price is going to go up.
It's going to rip.
And you would have not gotten out of your position because you would have been like, I know it's good news. I'm going to wait until it goes up.
It's going to come back.
And and you just get absolutely toasted.
Yep.
So, like, knowing that information in the background, it's going to affect your decision-making, and it's going to be so much harder to stop out of these trades that rip against you.
It's so true. And then, look, bro, the market imbalance happened to a T. All the way down to that weekly time frame level. I was blown away, bro. This was like one of those days where I was just like, wow. Like, once you see it, you cannot unsee it. You know what I mean?
Oh, yeah.
Like, it's insane. It just brings us awareness like no other. Oh, yeah, this day was really good. Really good day. So this was another trade we took. I booked this, bro. I'm not going to lie, Darren. This one hurt. I took this long. Once again, I mean, we've seen this. How many times this week did I take this same exact trade?
To the downside.
Yeah, hey, dude, break below, wait, grab everybody's stops. See, once we're starting to come back to a bull run. And when we're in bull runs, I mean, I've been in one other bull run. Large money needs liquidity. They need to make money. Everybody can't buy, otherwise no one loses. If no one loses, no one wins. So ask yourself when, and don't get too analytical about it, because I've been there too, and that's not good. But ask yourself, does it make sense here? Like, I guess what I'm trying to say is just be patient and aware, right? I mean, let the story be told, understand the story. I mean, if you took this short, that's a good play. I'm not hating on it. I didn't take it short for a couple reasons, but it's not a bad short play. The reason I didn't take it short was right here. We had this little demand right here. And also, this weekly time frame level really stood out to me. So if you see over here on the weekly time frame, this level was respected once, twice, 3 times. So this was a really critical level for me. And seeing how we ripped right into it, and then pre-market buyers showed up. Hold on, guys. So once I seen buyers really respect that, it just kind of set me in like a more bullish standpoint. And it just goes back to what Darren was talking about earlier, right? Where, just because you're seeing your setup doesn't mean you have to take it. It's more importantly understanding the story. So, nice little breakout there. Sold profits right at pre-market high. And then this happened. Boom! Bro, it was sick. This was literally it doesn't matter, but this was like another $700 on my contracts, but it's fine. It doesn't matter. So instead of going, oh, I missed it, I used that same daily time frame level that we just ripped above. Now, this is going to highlight a little higher on the 2-minute. I made this trade using the 5-minute, but I want to show you guys something. When we're coming into that level, right? A lot of people ask me about where do you get in on a retest. And I want to show you here. What this structure breakout that we got down here off the lows, right? Where we broke below it and then ripped above it. Check it out. You could do it on a much larger or much smaller time frame as well. See how I just drew that little low and now we're retesting it? Hold on. Let me make it so we can. Here we go. No, hold on. I look for break of structure everywhere to tell me who's losing the battle, is basically what I'm getting at. We got this 4867 level. We've broken below it. We're retesting it. So now, once we break that level, bing, I'm looking for longs, targeting the previous high. Here we go. That's better. So we broke above it, came down for a retest. Sellers lose here. They couldn't make a lower low. That's my entry, targeting a high of day. You can see we ripped hella past it. Getting a really good move right there. And then we were really extended from the 9, book profits. And now this kind of highlights like the trade we took on Friday. Me and Darren were talking. We're like, if we get back above the 9, we're going to rip, right? You can see we're below the 9, get back above the 9, bam. So the reason I say that is because sometimes you're going to be in trades and there's going to be some, pullbacks or et cetera. The more understanding you have of what price looks like in an uptrend, how it reacts to the 9, is really going to help you put on some great trades. So that was a really good trade right there. And you can see, though, look at here. Here's another long. And it's all those little breakup structures. Like, I'm looking for sellers to lose, right? Like, sellers come in. I used to see red candle and go, oh, I got to go short. Where do I go short? Now I'm going, oh, where are sellers going to lose? Bam, lost on that candle. Perfect long entry, targeting the highs. Bam. So it's the same stuff we've been talking about. It's just in a different perspective. So yeah.
Yeah, whatever that daily level that you have, 48640, that was a strong demand zone that I had.
Yep.
Yeah, for me it's at 48650, but yeah, it's the same thing. That was so strong, and seeing that hold, it just really and get retested multiple times too, and
couldn't
not
break.
Fail. Every time we came into it on the 5 minute, we saw like a bullish, bullish engulfing candle.
Yeah.
And
bam.
And it just definitely showed me conditions right there.
Yeah, absolutely. And then Friday was another really good day. I mean, dude, the patience was there. This was a really good day. I mean, we had all-time high at 49142. End of day was just about defended right in the morning, but we missed it. And then price was ripping up, respecting the 9, but I couldn't find a good entry. So, I mean, for everybody was there at the live, we couldn't find a good entry. So what did we do? Nothing. We watched it happen. We watched this whole morning happen. And I'll ask Darren right now. Darren, do you regret sitting on your hands?
Absolutely not.
Yeah, exactly.
Absolutely not, because, and the main reason is not because, of the money that I missed out on, but now I know that when I wait and I raise my criteria, I get rewarded. So
exactly.
I'm more thinking about it in the way that Friday programmed my mind.
Yeah.
Not how much I made or not,
right.
How good of a trade it was.
Right.
But I'm thinking about how I program my mind for the next 100 trades that I want to take.
It's so powerful, bro. It's so true. And like, look at all the chop in the morning. If I'd went long here, I would have definitely stomped out here for about 10% return. You know what I mean? Like, I mean, I maybe not have, but I'm just saying, like, waiting for that better move, that better criteria. I'll run through why I entered. I entered on this candle. I actually entered like right when this candle closed. So all-time high, was that all-time high? I'm probably wrong by a couple cents. Yeah, this was it right here. Okay, so that was all-time high. Look at the perfect retest off it, bro. Insane. Now, hold on. Like, it's crazy to the cent. So once this closed, I went long with my stop below it. And more importantly, you know how I've been talking about the break of structure in a bearish standpoint? Let's look at it in a bullish standpoint. At which point do sellers fail? If I'm long right here, the top of this candle is going to create bullish structure. Break, retest. So, and you guys can hear me in the live. In this trade, I literally go, my stop is going to be below the top of that candle. So now at this point, I've entered right around 492, and my stop is 49210, right? So I'm literally, because that's all I really need. I mean, and then, I would have been okay with maybe holding till all-time high as well. But what I'm trying to do, like Darren said, is start to program my mind to understand who's in control of the market with more detail. And those little candles are going to provide that. It's structure. It's just structure on a much lower scale. And I'm sure if I whip out the 2 minute, you're going to see that's the point sellers couldn't win, right? Like, We were below it. I longed this candle, and then we can never get back below it, right? So anytime, say you're long right here, in your mind, you got to be like, okay, where's structure on this little, where's the, at what point do sellers need to win next to show they want this, right? And then, I mean, price came down, tagged it. I mean, the rest was history. You know what's crazy, Darren? No bullshit. I bought my contracts here for $98 and sold them for $170. I seen what you
Get
post.
out of here.
I'm not bullshitting. I'm not.
I went from 96 to 174.
Yeah, bro. When I seen you post that, I was like, this is insane. So, and you traded QQQ.
Close,
You traded QQQ, and I traded SPY.
Yeah,
it's absolutely, yeah, it's nuts. But in reality, it was just trading the conditions perfectly. SPY was really ripping. But I want to show you guys here. Massive red candle. Break. We're coming up for a retest. This is bearish conditions. Starting. Look what happens once it breaks. Boom. Massive move up to the highs. Right? So I took this long here up into the highs, and then I caught one more trade on SPY, which I ended up getting stopped out on this candle. So phenomenal day though. Amazing day. All right, I'm coming, babe. I got to step away for 2 minutes.
It's all good. Yeah, I'm just really glad everyone was able to be there on Friday and catch that trade. The patience was the biggest thing for me. I was really happy with how that went, and did we see a perfect imbalance from end of day up to the all-time highs that we had even expected? Yes. Like, I was waiting for that imbalance to happen. The same thing was happening on QQQ, that same imbalance, and we just waited and we watched it happen. And instead of thinking that we missed it, I was thinking, this is telling me more about conditions. Now I understand if we can make this entire imbalance and hold above it with strength, it was making me that much more confident about this long play to the upside.
And that pre-market level right there, bro, lining up with all-time highs was just paramount. Bro, it's critical. And bro, I mean, like I was talking about in the beginning, trading live is new. I mean, it's not, I'm not going to sit here and say it's easy. It's, you want to perform well. It's literally the same exact feelings that I used to get when I would get massive tunnel vision in the markets. And it's like, what did we rely on? Our process, our criteria, our standard, right? And literally, bro, like, took this. It was a great trade. And just looking back, you said it perfectly. Doesn't matter the scenario. What matters is your ability to follow the structure. Bro, it's such a good trade, dude. Such a good trade.
Yeah, phenomenal trade.
So that was the week. I mean, the week was a really good week. Once again, I'm really thankful for this week, but more importantly, I'm really thankful for what I learned from it. I mean, whether or not your week was good or bad is kind of irrelevant. I like what you said, Darren. When I put on a trade, I'm asking, what's this doing to my mind for the next 100 trades? Mark Douglas says it perfect. You can find yourself in a winning trade under any circumstance. All what it takes to make a winning trade is pressing go, is entering, right? It takes no skill. What takes skill is seeing consistency. And what causes inconsistent results is trading errors. So you have to ask yourself, which behaviors am I making today that lead to irrational emotional decisions, right? Chasing, FOMO, not wanting to be wrong. I highly recommend that everybody dives deep into their R multiple. I mean, me and Darren talk about this all the time. What that is how much money you're willing to lose and how much money you need to make to accommodate those losses. Everybody's is different, right? I mean, everybody has different win ratios. Everybody has, etc. Right? And this data doesn't just come from 1 week or 1 month. It comes from months of trading. So, but look into it. Find out where your batting average is, how much you need to make every trade, and how much you need to be losing, right? If you're just, what's Mark Douglas say, bro? He goes, trading for thrill is fun. I mean, not knowing this stuff is fun because it keeps it a mystery. But when it's a mystery, you fail and you get inconsistent results. So, I mean, it's the gift and the curse, I guess, So,
yeah. And anyone who isn't using a trading journal, so I use TraderSync, by the way, and I think I had the basic plan, and it's $15 a month. I highly recommend doing it. You don't have to have it. You can just calculate the numbers yourself, but it's helped me so much. Just visualize those numbers. I can just filter. What was my win rate in January? Boom. What was my average percent loss in January? Boom. I can see all those numbers very, very easily, and I can see how they're changing over time. So if I see, okay, last week I risked, $20 per contract. How did all these numbers play out? Mm-hmm. This week I'm going to change up and I'm going to risk only 15. How did that affect my results? And you can filter each week and see all these results, and you can see how tweaking these tiny little numbers that I talked about at the beginning, tweaking these little factors about how you let your profits run, how tight you keep your stops, and you can see how that affects your overall performance. And TraderSync allows me to do that really well. There's also TradeZella. Or, you don't even have to do that. Like I said, you can just calculate the numbers on OneNote, do some math. It's not that difficult. But I recommend everybody to know those numbers and be aware of them and see them change as you make little tweaks in your process. It's really... It's the truth. It's really, it's the truth. Empowering almost in your own strategy.
I've been logging trades for the last 3 years just in OneNote.
So much trading data.
Yeah, I mean, bro, look at this. October, November, December. Dude, just struggles. I mean, bro, we were still trading the same, like pretty much, and this is just data, right? What's winning, what's losing, and after a while, you're going to start seeing better. And if Darren said it perfectly, you just need to dive into what's working, what's not working, etc. It doesn't matter how you do it. What matters is that you do it. And I'm going to leave it on this quote right here. When you're winning, someone's losing. When you're losing, someone's winning. The person that you're losing to is putting in massive work. They're logging their trades. They understand the game in risk-reward ratio, right? So, I mean, I used to think one day, I was just going to make it and start doing well. Nope. It literally took me 3 years and a substantial amount of money to finally go, okay, what the hell is this risk-reward ratio? Like, maybe I should approach this a little differently. So it's just crazy. All the trades I showed you today, I kept my risk extreme. It met a certain criteria. It wasn't that it was better than the one before it. It wasn't any of that. There was multiple trades I seen that I liked, but it couldn't take because of my stop. And it's just crazy how that usually increasing your criteria leads to a much better setup. So on that note, I hope everybody has a great weekend. Message me, message Darren if you need me. Let's crush the month of February. Thank you everybody for coming. I will see you guys Monday.